Hey guys, welcome to the portfolio update for all of July. We update you every month on how the portfolios did. So if you're a brand new customer of ours, of course, every month you can expect for us to kind of go over the good, the bad, and the ugly. And if you're just joining us, then you'll get a peek at how this all works at the moment. One of the things I want to point out is we've been running scenarios against having one fund versus having two. A great example would be if you're in the aggressive ETF fund, or if you are in the aggressive stock fund. What we did is we said, what happens if you invest in both of them evenly, or you pick just one? And what we find is that when we go back here in over history and we look, we went back 5 years to see that if you had invested in both of them with an even split, you'd actually beat the aggressive ETF fund. So just like a good 401k has a multiple mix of investments, you might want to consider having more than just one fund. I know a lot of you have recently started doing some of the stock fund as well as some of the dividend fund. You have some of the same stocks in there, but you got a nice dividend going on. You've got the nice aggressive position going on. Just know that you can do that. You can certainly say, I'd like 20% to be conservative. I'd like 60% in the aggressive stock fund, put some of it in the dividend fund, divide the rest up over some of the other funds. You are able to choose more than one fund, so don't be afraid to pick on me. If you need help with that, happy to help. All right, let's make this quick because I know I promised I would keep this short. I always make these too long. What I want to do, you should be able to see on the screen there. The first fund is our low volatility ETF fund. This is designed to move very slow. It is really only for those of you that want to be super conservative with a portion of your money. It's currently paying about a 2.4% dividend, which is pretty nice actually. We're trying to keep that up. And for the moment, that's looking pretty good. You guys also just saw those dividends get paid out in your accounts. So this one's not bad. The performance is very slow. Remember, we invest for speed here. We do not pick stocks. We do not try to guess the next great winner. We try to build portfolios that move at certain speeds. We want this one to move as slow as humanly possible while still giving a little bit of growth there. And I would say everything for us is good with this one. Very minor changes. All right, next up is a slightly faster portfolio, our medium-term conservative fund. This one, to be honest, is doing well. Of course, everything that we've been sort of doing there is working just fine. It's designed to stay back a little bit from the market. The overall speed of it, you can see, is just slightly faster than the ETF fund. I'm really thinking about getting rid of the ETF fund. The issue here is we have a ton of different portfolios, but we have to sort of get them approved before we can offer them to customers. And so one of them that we're trying to get sort of put out there right now is an international fund that moves a little bit slower. If that's the case, then we may get rid of our low volatility fund because none of you really use it anyways, and move you guys into this medium-term conservative. So for this month, what we did is we took this conservative fund, we just started slowing it down ever so slightly because it may take the place of our slowest fund. So just so you know that, we'll keep you updated there. Okay, our long-term moderate fund, now we're moving a little bit faster in our portfolios here. Happy with this one overall. Energy and oil were sort of the laggers in this portfolio. It held it back. You can actually see on the charts just a little bit. It will play catch up because it is moving at about half the speed of the market. But because energy and oil sort of suffered lately, it was actually one of the worst months for oil in a long time. That held back the performance of this fund. So just know that one's a little behind. It's playing catch up at the moment. We'll see how August goes, but happy with that one. We did sort of speed it up just a touch by using some more of that energy position. So maybe that'll help better perform in the month of August. All right, our dividend fund, I've got to put this up against the best dividend funds on the planet. I'm sure there are ones that maybe perform better, but overall, this fund gives you growth, and it's been doing really well as far as growth goes. But look, we've got a 3.41% dividend. That is unheard of. The S&P pays 1.89%. So if all you did was buy the S&P, you'd be looking at about 1.89% depending on how you did it. Our dividend fund spreads you out over 100 stocks. So you're getting that diversification. It is performing very well. This one has been like every day we're like, should we change something? No, don't touch it. It's going well. Should we change? Should we make little tweaks? It's going well. We have no need for any changes at the moment. All right, our long-term ETF fund. This one's designed to be sort of towards the upper end of how aggressive we can be. By the way, down here at the bottom, these numbers you're seeing, we're going to do a class on this on August 14th to really uncover the details of what it means, speed and volatility. What exactly are we talking about there? It'll be for you guys only, just for our customers there. But bottom line, Treasury positions underperformed. REITs, real estate investment trusts, sort of balanced out the equation. They had a good month. Energy, really, that was kind of the weaker space. It didn't really do much, the position that we have there, but it just didn't give us that oomph because of the price of oil. So no changes there. The problem with part of this one here, with sort of that late month, you could see how later in the month it started to slow down a little bit. Part of that comes from the last sort of end of the month, when tech really just gave up a lot of its gains there. So tech really held us back on this one, I think, for the month. But it's moving along as fast as we like. Just a couple sectors, if they just sort of balance out or relax a little bit, that would help this thing pick right back up. So sort of happy with that one. And finally, our aggressive stock fund, currently the most aggressive fund that we offer. It is moving faster than the market. You can obviously see that on the charts there. It is more volatile, so if you're looking at this going, hey, I want that performance, you know, it's going to move around, right? When the markets fall, this thing will fall aggressively. It will fall faster than the market. We do try to do some things, really earn our keep when the markets fall, but for now, steady as she goes. You've got some nice moves on Celgene, FedEx, JP Morgan, Vertex Pharmaceuticals. Those all had really good months, and those are some of the positions in our aggressive stock fund. Of course, they did well. Saw some weakness in home builders. We've been kind of pointing that out in the daily beat there, the closing beat, where the home builders a little bit weak. That sector as a whole just starting to really get soft. And we have Toll Brothers in the portfolio. That's probably our worst performer overall. And then a company called WestRock. If you're not familiar with them, the symbol is WRK. That was one of the weaker performers in our in the aggressive stock fund as well. And then, you know, you had a lot of names. One of them in particular, Lowe's. Lowe's was just sort of flat, right? There was no real excitement. It didn't have any great anything, no news, no nothing. It was just one of those slow months for Lowe's. And so that's why we're really diversified. We have enough positions to move us faster than the market. Some of the ones that are underperformers, we are hunting for ways to replace those stocks or reduce the holdings and add another one so that we don't mess up the speed of the portfolio, but maybe we can go ahead and start moving forward with something that's a little bit better performing. I'm not too excited about the home building sector overall if you're following along there. Well, anyways, that's our portfolio update. Do keep in mind that you may want to have more than one fund, right? You may want to consider the idea of having a nice mix there. We're happy to do it for you, of course. And be on the lookout for some new portfolios coming up soon. We're like in the final stages of getting these things approved. It is sort of a nightmare to get them approved, but we'll do it for you. We have actually lots of them that we're in the works getting them approved. And of course, I'll make a big deal out of it when they do become public and we can talk about it. So if you have any questions for me, if there's anything I can do to help you, of course, you know where to find me. Otherwise, that's our performance update. We'll talk to you soon.